Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and policy impact. I'm Govindraj, Ethiraj. The Medical Council of India has asked doctors to start prescribing cheaper generic drugs instead of branded ones to patients or risk facing penalties. Now, the Council had earlier issued a notification to this effect in 2016. Now, the move is being seen as patient or consumer friendly, but this has upset the pharmaceutical industry, which believes that branded drugs represent trust and dependability. Now, the larger question is, how will doctors actually implement this, and equally will chemists or pharmacy stores be able to interpret those generic prescriptions, particularly as the nature of drugs become more complex? And finally, could the move overall benefit patients and make prescriptions more transparent? Now, to discuss this, I'm joined by Keval Handa, former Managing Director of Pfizer, Dr. Abhay Chaudhary, Administrator of the Maharashtra Medical Council, and Vikas Dandekar, Pharmaceutical Journalist with CNBC TV 18. Thank you all for joining me. So, Dr. Chaudhary, let me begin with you. Do you think this is something that can be implemented easily? We'll come to the merit of the directive itself later.
Yeah. Yes, definitely it is implementable because that is what the main focus is about healthcare and affordable healthcare is.
Okay.
So once we talk about affordable healthcare, naturally the quality aspects are to be taken care of. Many times people are under impression that generic medicine means it's a very cheap, substandard and the kind of things which can be into brackets spurious also to some extent, but that is not so. So first and foremost that people need to understand that is the generic means actually it is same biologically, pharmacologically, pharmacodynamics is same, the quality manufacturing process is also same. It has to pass through all the tests which are required to be a good drug, which is
that's
licensed.
how it's available at the shop.
And that's how it is available in the form of generic.
Okay.
So we can say that it's a minus expensive, the cost. It is same as the main drug,
Right.
pharmaceutical drug, which was approved.
Right, but the generic will also have some brand, right? Because there is a manufacturer.
Yes, yes. So, but that will be abbreviated and mainly it will go with a chemical name.
Right.
Yeah, pharmaceutical name of it,
right.
but and not with because a lot of money goes into branding it, and obviously if it is a patented, they would try to have some more finances out of this because there is a lot of money which has gone into development of it.
Right. So, Keval Handa, let me bring you in. So, if generics are the same pharmacologically speaking, pharmacodynamically speaking, what should then branded drugs be a concern, or should that be something that we should be talking about?
I beg to differ with doctor on one point. They have to be same, but they are not same. That's the difference. Now, globally, they are interchangeable. That is as good as a patented product. But do we have a system here to know whether they are interchangeable or not? I think that's a big question, doctor. Because the way the generics are approved, there is no bioequivalence done. There is no data on the safety and efficacy of the product. We don't know about the GMP practices that are being followed at the plants. The plants are not being audited. So as far as to say generally that generics are the same are fine, but if you go to the ground reality, they are not the same. So I think let's put it that the patient is very at a high risk as long as our regulations are not in place.
Obviously, when we talk of generic, we cannot compare that generic with the spurious kind of medicines which are available in the market and which has no pharmacological or variable pharmacological action. So it's we cannot compare that, and that is maybe the reality because the spurious drugs or other drugs are available in them. But once it is approved as a generic drug, it has to follow the full FDA process, and then naturally we need to gear it up.
Right.
It is like fighting.
So, are these available
fronts
in the market today? When we say generic, the way we understand generic,
Yes.
is that what is available in the market, fully approved?
Yes, there are almost it's a big market in US, in other countries also because there is a
in India.
stronger.
Yeah.
In India, yes, we'll have to generate a lot of efforts on that front.
Okay.
But to make the drug affordable and healthcare affordable is the main goal for it.
So, because is this something
start
that
as such?
So it's more a going forward effort rather than an existing effort?
Actually, there is a very small market for generic products. For pure generic, as in for a crocin, a paracetamol, it's a very small market of the $16 billion market that we have at present. But I would like to take you back to the entire debate of where has this come from. It's actually come from the whole issue of breaking the industry doctor nexus. Are we addressing that point, or are we actually getting a little more complicated on addressing the quality issues? I think we are getting mixed up on these two aspects.
No, so you're saying the directive is getting it mixed up, or
Yes.
or we as
branded generic should be fine. The whole idea is that the companies are said to be earning a lot of margins, and it is bribing doctors. So a lot of promotional expenses is going in. In promotional expenses,
Sure.
in issues like these. So if the enforcement is actually done well, and if the regulatory processes are followed in approving the right products, I think the problem will be solved.
So you're saying the problem will be solved at what end? In terms of, I mean, that all will be able to exist peacefully together?
Yes, absolutely, because the pricing can be
Right.
contained in
Okay.
that.
Right. So Kevalanda, can I come back to you on this? So what Vikas is saying is that basically if everything was equal, that is there were no marketing costs, there was no push cost, then all manufacturers would be on an equal footing.
I don't think so. That would be true for all manufacturers. There are manufacturers and manufacturers in India. As I said, we don't have a regularity of plant audit. We don't have data from the plants coming out. We don't have the safety efficacy of the data of the products. So there is no way for a chemist to differentiate two generics and say which one is good or bad. It's only the doctor who, after experience the product, can tell whether the product has worked or not. So therefore, I think let's leave that for the time. As long as the regulations are what is it today, the generics are not the same. Spurious is a different animal. It's away from what we are talking about today. Now, talking about Vikas, what he said, there is a doctor nexus, and therefore a lot of money is spent on promotion and so forth. There are two elements to it. A is there are a lot of companies who are abiding by the ethical norms. For example, let's take a company like Glaxo, who have agreed to spend not a single money on this. A lot of companies are doing promotions very ethically. You need promotions to bring about the differentiation, to bring about knowledge, to educate doctors, to spread awareness, and therefore you cannot do away with that expense. If at all any expense that is spent directly on doctor, it's very minuscule. I think in anybody's books, there would be no such direct expense. If it all was hidden somewhere, it could be not more than 5% of the total marketing and distribution cost. The major cost is still the field force cost.
Keval, do you agree that this is one of the objectives of this directive is to really break this nexus, as Vikas says?
Well, I don't think so that nexus is there so much that we are talking about. We need to strengthen the processes to break the nexus. And Vikas is right when he said, you have MCI guidelines. I would like to ask, how many times you have penalized the doctors on this? How many times you have caught doctors on this? How many times you have pulled up their licenses on this? So these are the things we need to strengthen. Similarly, you need to have guidelines for ethical promotion with the corporates and make these guidelines mandatory and make these guidelines criminal, and then you will see the difference.
Dr. Chaudhary, can I come back to you? So as more generics are prescribed, since now it is a rule and whether it's contested or not, how will the chemists or pharmacists, the one we are used to going, and we are sitting in a city like Mumbai, I mean it may get a little more complicated as you go into towns, villages where maybe literacy levels are low. So how will that transformation?
See, it's like, more and more awareness, as he also mentioned, that you need to inform the doctors as well as the availability of things, of a standard quality things, and the points at which it is available, the depots where it is available, or in regular pharmacy stores where it is available. We also need to catch on them and guide them appropriately, because it is also related to the patient safety, which is very important.
What we are saying today is that generics will be sold through separate chains or separate.
No, it could be
stores,
separate because there could be some other,
because there are some state sponsored,
so some inhibitions could be there for their commercial interests or whatever it. So that is why when we are making it available in all the institutional drugs which are being available, that's a big thing. And then also at the points where it could be made available. So that is what government would look into and make it available as such.
So because if you were to go forward, assuming so this directive is there, how is it going to get implemented? How will this start rolling out, and what will I as a patient experience?
Right. So right now there are absolutely mixed signals. Only recently the Indian Medical Association has also put out a note for its members that you can write in bold the generic name as well as the brand, giving the assurance to the patient that yes, this is of a XYZ company which follows certain quality standards. But in turn, actually it puts the onus of the quality on the doctors, because can the doctor be an assurance who is actually giving them the certification that yes, this product is going to be good, because he doesn't know whether it's gone through the bioequivalence studies. And by the way, bioequivalence studies have been made mandatory only this in April second week. So till now there was no such clause which will get us all the products absolutely safe and efficacious according to the bioequivalence study.
So in some ways, then are we in a way have to rely on branded for a while till?
It looks like that.
Okay.
It looks like that.
Okay. Last word. We're running out of time.
Market won't catch up, with the word go. We have to. It's a developmental process. As we go on, more and more, we are going to achieve it. Even in US, when it started long back, they are almost 80-90%. They are having the generic name. The HIV/AIDS treatment has totally revolutionized the world over. So many lives were saved. It's all because of the generics which were made available. So it's not that it's a bad name for the branded thing, but they also need to look up that to what extent we should have that kind of profitability.
Right. Keval, last word. So will pharmaceutical companies be in some ways forced to adapt to this new world, wherein maybe they start producing more generic drugs, or they unbrand their existing branded drugs, and finally at the chemist level or the patient level they'll figure it out?
Well, I think as the evolution takes place and more the availability of generics takes place in the chemist shop, the companies have to adopt and change and look at the strategy as saying what are the products that they want to generalize, and it's all that you can't do it. Maybe combination products would be difficult to do, chronic would be difficult to do, but acute products is one they would like to look at the portfolio and say they can have two sets of things, one branded as well as for generic portfolio, which some of the companies are already doing, company like Cipla are already doing. And therefore, there would be a different shift in terms of how do you deploy your field force, where the promotions will be made, what type of margins you want to give it now to the retailers. So all these things the companies will have to take into account as they build on their strategy going forward on this new directions that have come.
So last word, Dr. Chaudhary. So is there something that you're doing in Maharashtra, for instance, to enforce this? Yeah,
enforcement in the sense we have also told all the registered medical practitioners that they got to follow the ethical guidelines which are there, and naturally those who violate would be under radar or under the
and how would you catch them?
No, it would be again what kind of things which are available. There is no mechanism as such as to individual doctors and things. But yes, there would be regulatory mechanism that we would like to put it on place and then help out the patient.
Well, keeping the patient safe is a good note to end on. We need to go in for a break. Coming up on the other side, the Indian stock markets are hitting record highs again. The rupee is soaring. Let's find out why and what impact will it have. Joining me are Ashish Kyal of Wave Advisors and Saurabh Gupta of Quantum. Stay with us.
The sacred relics of Buddha were unearthed in Piprava in Uttar Pradesh. Buddhist monks from all over the world visit the National Museum to pay their respects. These charred bone fragments of Buddha are housed in the gold canopy gifted by the royal family of Thailand.
Welcome back to Policy Watch. Indian stock markets are soaring, as is the rupee against the dollar. The 30 stock BSE Sensex closed above the 30,000 mark for the first time to hit a record high on Wednesday, riding a global stock rally. Now, the rupee, on the other hand, has appreciated against the dollar to hit a near 21-month high of 64.07. Now, the main reason for the sharp rises in markets appears to be liquidity, both global and domestic, and the perception that India's economy is on a sounder and more stable footing now and in coming months. But will these highs sustain? How should investors view these bullish markets, and how can issuers, including public sector units, use this opportunity to raise fresh capital? To discuss this, I'm joined by Ashish Kyal, founder of Wave Strategy Advisors, and Saurabh Gupta, associate fund manager at Quantum Asset Management. Saurabh, let me begin with you. So it's a record high and looks like we're poised for more record highs. Can this continue?
Look, so there are two parts of any bull cycle. One is the liquidity, and second is the earnings upgrade cycle. So liquidity is ample, as you highlighted, but the earning upgrade cycle is not coming, and we do not see it coming further because the capex cycle is not picking up. So we would be wary about at these levels of the market, and we believe that.
So when you say capex cycle, you mean really companies investing in more capacity, becoming bigger in terms of output, and therefore earning
exactly
more?
Yeah. So if you look at, I'll just on two sectors that are real estate and maybe IT services, where the most of the employment generation happens. Both are struggling in terms of growth. So we are not seeing a lot of employment opportunities growing. So the consumption growth will not come. So all these are interlinked, and we don't see this happening at least six months, 1 year.
But on the flip side, for instance, a company like Maruti Suzuki seems to have had record earnings, record profits, high capacity, earning better margins from its products. So how does that then stack up?
Yeah, so Maruti is one of the outliers, and maybe some bit of airline industry which are doing well, but rest of the industries, capex driven industries, are not doing well. And so employment opportunities sectors like real estate, as I said, not
so
doing
you're saying on the demand side, you're not confident at all.
Exactly.
Right. Okay. Right. Ashish, what's your sense? I mean, how can this continue in the way that we are seeing? What are the red flags, if any, that you are seeing ahead?
Govind, the overall trend for Nifty, it has now rallied from the lows of 7,900 to near about 9,400 now. So there has been a sufficient up move from the lower levels. And what I see is that markets are probably discounting that the earnings which are going to come in over next 3 to 6 months are going to be much better than what we are seeing right now. So that is what is getting discounted. Another point that one has to observe very carefully is that this rally has been led by Reliance Industries as well. Reliance Industries was somewhere around 1,000, I guess, in the month of Jan or Feb, and it is somewhere around 1,400 right now. So a 40% rally in Reliance Industries has contributed significantly to the up move of the index as well. So when Nifty and Bank Nifty has moved toward the lifetime highs, it has not been contributed by across the sectors or across all the stocks. It has been contributed by limited stocks or sectors that has potential to outperform. On one side, if you look at Maruti, has been an outperforming stock, a very strongly outperformer. On the other side, Tata Motors has been a major laggard. I mean, this stock has been struggling after moving higher. It has been struggling over past few months. So we need to do a stock specific pick at such current juncture. And from here, if you ask me where is Nifty headed, I think 9450 should be a very important level from where there is a possibility we might start seeing some reversal. And any kind of a healthy movement requires some retracement or correction after the up move. So what we have seen right now is an up move from 7,900 to 9,300, 9,400. Some correction is definitely awaited here because that will be a healthy sign for the overall market.
Right. Okay. So broad-based or not broad-based. So what's your sense? So Ashish says Reliance is driving it. So the question here, at least this is a policy issue. We are not focused so much on which stock specifically drove it, but whether or not people should believe this rally as a whole. What's your sense?
Look, sentiments are one thing, and the reality is another. So as I've been saying that so the ground level things have not improved. Maybe little impacted by demonetization. If you look at two-wheeler sales, they are not going up. They're pretty sluggish. Maruti, as you said, is an outlier. Pharma, if you look at, they are struggling with regulatory issues. IT services is struggling with regulatory issues and other issues in their key markets. So we really feel that the market is clearly ahead of fundamentals right now.
Okay, right. So how could this pan out then? I mean, so finally, because we're also now starting to look at supply, we're seeing good stocks coming. A lot of government, public sector units are waiting to raise more capital. So how should they view this?
Look, there is definitely a demand. As you see, IPO market is booming and people are looking for new ideas. So the liquidity is so much that we are always constantly looking at new ideas, and that is driving the IPO markets as well. So whenever there is a company which showcases good growth in not so great environment, people will lap it up.
Right. So Ashish, if you were to look at this sort of liquidity straining at the leash, so to speak, how does one use this as an opportunity? I mean, from a policy point of view, can we tap this liquidity?
Absolutely. See, there has been lot of liquidity, lot of cash lying with mutual funds, lot of money, disposable money, which is lying in the hands of investors who wants to put it somewhere for a productive use. Right now, if you look at the interest rates, people are aware now that the FD rates are not going to provide them much of the returns. Gold, as we know, has not given much substantial return over past few years. So the only option they are left with is probably stock market that has driven on the upside. But what these investors are also finding, if they end up buying a wrong stock, they are not making money. So they need to put it somewhere where they can actually capitalize on the up move or the growth which they are looking forward in the future. And the best way to do that is right now everyone has started putting money in IPOs, because IPOs have given substantial returns over past few months. They have listed fairly about 20% return or 30% return, and that's why people have started chasing IPOs right now. So if government want to divest money, I think this is the right time, because people want certain ideas where money can be made, and IPOs or probably by divestments, those are the places or those are the pockets that can be catered or capitalized right now.
So, Saurabh, can I come back to you? So how do we see this developments in the Indian market in the context of what's happening globally? Because we're also seeing global markets hit record highs, but that could suddenly turn from, at least that's some of the reports that are coming in.
Yeah, so you have a fair point. So this is a global rally. If you look at all across, all the markets are doing well. Emerging markets are also doing well. So India is not isolated anymore. So we should keep a tab on how are things.
And that's interesting, because at one time or somewhere in the intermittent period, we were isolated and then seem to be again converging.
Yeah, so the liquidity is both the domestic and foreign liquidity has been the driver. So FIs continue to hold majority of the free float of the stock markets. So we have to keep a close tab on what's happening in the global economy, primarily the developed markets, the rates over there. And if the rates move up and the cost of capital goes up, we will definitely have a pull out of FI money.
Right. Okay. So, and speaking on FI money, Ashish, if I can come back to you. So the other factor that's been driving the markets in some ways is the rupee, or is a beneficiary of the fact that markets are going up. So what's your sense? I mean, how can the rupee either help or not help in coming months?
Govind, the overall rupee appreciation has been very fast. We have seen rupee moving from near around 69 levels to as much as 64 right now. So that has been a pretty good factor, because for a country like India, which has heavy import bills, if the rupee appreciates, this is going to help the imports on one side. However, it is going to hurt some export-oriented companies like Infosys, TCS, that are already facing a lot of headwinds because of what's happening in US and also the rupee appreciation. So it's going to benefit to some extent certain set of companies, but at the same time it's going to hurt a certain other set of companies. So during such scenario, I think it's better to focus on where the momentum is lying right now, which companies are performing good given the scenario. And also, yes, you rightly pointed out, it has been the global phenomenon. There was a decorrelation between, and now the correlation has increased again, where Dow Jones is somewhere around 22,000, Sensex is at 30,000. So we are probably trying to catch up with what's happened in US, and we are trying to be in lines with the global markets. So we need to keep a watch on the global markets, how they are behaving. We need to keep a watch on what is happening with dollar index that tracks the global dollar currency. And also if the rupee continues to appreciate from here, it's going to benefit certain set of companies from here on.
Right. So, Saurabh, what's your sense if you were to look ahead? Now, we've got the markets and we've got the rupee, and we're trying to understand what could be earnings, right? So, assuming, let's say, these are 3 points of the triangle, of which rupee may be a weaker part, maybe not as strong part. So, how could, where could could there be a convergence of minds, so to speak, on where companies can land or which companies will do well versus the liquidity and versus what the expectation from the markets are?
Look, from a country perspective, an appreciating currency for an emerging market who is trying to set up a manufacturing base is not a great idea, because that makes us uncompetitive vis-a-vis others. That's one part. On the stock market perspective, definitely companies, export-driven companies like IT services and pharma will definitely suffer, and some import-dependent countries, companies like say VIP Industries or the companies which have a lot of import component will definitely benefit.
But in the market today, which has larger wages? It's the IT companies as opposed to the non. I mean, is it the export companies or the?
I think export, purely from the benchmark perspective, I think IT services is hardly now 12%. Primarily 20-22% are banks now, right? So definitely from a benchmark perspective, rupee appreciation seems to be better.
Okay, great. So let me get some last words in. Ashish, your outlook for the next few months, literally the next 3 months or so.
See, the overall markets, I think, is overstretched. The PE ratio is in the danger zone as of now. I think we are going to consolidate for a few months. We are going to see a range bound action. If Nifty corrects towards the level of 8,500, I think that would be an excellent opportunity to enter the markets. I think it's going to move between 8,500 and 9,500. There is going to be consolidation, or it's going to digest the huge gains that we have seen over past few months. So that is very, very important, and that's how I look at the markets from here on.
Right. Thanks, Ashish. Saurabh, last word.
So generally, we generally look at the market from a long-term perspective, but near-term, definitely, as I said, the valuations are too high, and we expect the markets to correct in the near term. Could be used as an opportunity to invest for the long term.
But meanwhile, you're also seeing continued inflow into your mutual funds and. Yeah.
Yes. So the inflows, so as I was discussing, the SIP culture has built up in the country. So that SIPs generally are a stable source of flows for mutual funds, and they will continue to come. But as a mutual fund manager, we should be assured that we invest in the right stocks and do not get desperate when liquidity comes in.
Thank you, Ashish and Saurabh. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.